Hi, I'm Julie Cooling, founder and CEO of RIA Channel. I'm here today with Alan Swearingen, Managing Director for LaSalle Investment Management. Alan, thanks so much for being with me today.
Julie, really happy to be here. Thanks for having us.
So Alan, I know you and LaSalle have a ton of experience in the real estate markets. Why should advisors be considering investing in real estate?
Yeah. Well, being here at this incredible conference, Schwab Impact, we get asked a lot by financial advisors about embracing alternatives, kind of moving out of the 60-40 model, and what should be one of their first additions. And we think real estate should be that first addition because it has lower volatility, lower correlation to equities and fixed income, good, durable, reliable income, and today has incredible inflation hedging characteristics.
So inflation is definitely on folks' minds. Advisors are concerned about it, investors are concerned about it. How does LaSalle solve for that?
So in terms of focused on real estate, we're primarily concentrated in core, lower risk, but durable income real estate. And real estate historically has kept up with inflation in terms of growing its income stream. Rents tend to go up over time, Julie, and landlords tend to get the benefit of that. And so that trend of growing income for the last 30 years has actually exceeded inflation.
And what particular product types should investors be looking at?
So first off, we really focus on being diversified. Don't have too many eggs in one basket, especially from a risk management standpoint. But in terms of real estate, the top performing sectors today are residential, both apartments and single family rentals, and industrial. And we also like healthcare oriented real estate. The demographics of healthcare oriented real estate are pretty strong today. That makes up about 80% of our portfolio.
So if you had to tell advisors one thing about real estate that they should think about, what would it be?
So not all real estate is created equally. It's a $20 trillion asset class. It's about a little more than a third of the equities and the fixed income market. But there's many different styles across the risk return spectrum. There's many different property types. So get to know your manager and understand what they're investing in. And today, more than anything else, I think investors should be focused on having lower leverage and not too much interest rate risk.
So if you were talking to an advisor in terms of allocating to real estate, what percentage would you say within an alternative strategy should be real estate?
Yeah. Most of our institutional clients have an 8 to 12% allocation to real estate. And as you know, most RIA advisors for their clients probably have less than 2 to 3% for all alternatives. So we're a big believer in the democratization of alternatives and including real estate. And I would think a 5 to 10% allocation to core income-oriented real estate would benefit most investors today.
Great insights. Alan, thank you so much for being with me today.
Great. It's great to be here. Thank you.